Welcome back to Watching Business Incorporated right here on Channels Television. Well, let's perhaps get a little bit of tips of what might be going on, conversations going on at the MPC, at the CBN headquarters in Abuja. Well, joining us for that conversation is Mr. Johnson Chukwu. He's the Chief Executive Officer of Cowrie Asset Management. Mr. Chukwu, good afternoon, and thank you so much for your time.
Good afternoon, and thank you for having me.
So a little bit told me that you have some connections from wires connected to the CBN headquarters. And you could tell us what they are discussing at this time.
Well, it's basically we're going to be second-guessing them based on the economic fundamentals of the country. And we believe that the factors we'll be discussing are the same factor they will be taking into consideration in arriving at their decisions.
So it's just about a month since the last decision. We saw that 400 basis points cut. Do you think there'll be another, not cut, I beg your pardon, hike?
Increase.
Yeah. So do you think there'll be another hike as we speak? Are they planning to tell us another hike tomorrow? Or do you think they will say, oh, let's hold on and see the impact of the last decision, seeing that it was an aggressive move?
Well, what I think is that the most appropriate thing to do is that they should hold rates at current levels, because there's what we call in economic terms lag effect. The decision they took on 26th and 27th of February are yet to be fully manifested on the economy. So if you take another decision now, you can't say they have weighed fully the impact of the decision you took a month ago. Remember that the MPC meeting is supposed to be held every 2 months. And this time around, we're holding it a month apart. And even as they took very contractionary measures, when they increased the monetary policy rate by 400 basis points, from 18.75% to 22.75%, they tightened liquidity in the banking system from 32.5% liquidity ratio to 45% liquidity ratio, make-out reserve ratio, and they maintain liquidity at a ratio of 30%. The impact of these are going to be multifaceted as it relates to, one, fighting inflation, stabilizing the exchange rate, and slowing down productive activities. The impact on productive activities is yet to be felt because of this conversion cycle or asset conversion cycle of most businesses. So you will not see that already on the level of productive activity, level of demand. So I think the most appropriate thing to do is wait and see the impact, the full impact of the policy they took on February 26th and 27th. We are seeing the impact on exchange rate. We will not see the impact on inflation. Hopefully, we're going to see the impact on inflation after some time when traders begin to re-import or replenish their stock. We're going to see that the impact on productive activity, maybe in 90 days, when the demand would have slowed down, or producers will not be able to go to the banks to borrow and then go back into productive activities. So until this full weight is fully measured, I think the appropriate thing for them to do is to hold rates at current levels.
So you did mention that we know that normally, even before now, the meetings used to be bi-monthly. But I guess because of, the rate of inflation, we've seen the rate of increase from January to February. I say it's not slowing down, which is scary. And you are suggesting that the rates be held. But looking at other movements, you talked about the FX. For instance, we've seen the Naira gain for a couple of days, perhaps encouraging and all of that. Don't you think that, as the governor said in the last meeting, perhaps it's good to handle inflation first before thinking of growth?
Okay, let's look at it in the first place. I think one of the motivations for holding the rate today and tomorrow is because they want to restore to the normal periods when MPC holds. Remember the MPC holds January, March, May, July, September, November. So I think they want to restore to that timing. So I think that must be the primary reason, because we all know that the full impact of this policy decision they took in February would have been fully felt. As it relates to inflation rate, which moved 31.7% in the month of February. Remember, inflation is measured year-on-year price movement. So the February inflation was based on price changes between February 2024 and the price levels as of February 2023. So you can clearly see that the policy they took or the policy decision they took on February 27th had no impact, had no relationship with the February inflation rate, because that measured what price levels, price changes between February 2023 and February 2024. So that, having said that, there are some variables that could be impacted immediately when critical decisions of the very severe nature they took are taken. For instance, the issue of exchange rates. When you withdraw liquidity from the system, automatically there won't be liquidity for businesses. And that would mean that those who ordinarily need FX to import goods will no longer have the available naira liquidity to buy the FX. So you're going to see a slowdown in demand for FX and appreciation in the exchange rate. Those changes may be quite short in terms of their manifestation, but there are some that will take a longer time to manifest. Like I talk of the impact on productive activities. The trader, the business, the manufacturer who needs to access loan from the bank, we have to go to the bank to access the loan. Probably he find out that he can now borrow at 30%. And he realized that his price or market price will not absorb a cost of fund of 30%. So he refuses to borrow and therefore refuses to produce more. But he still has stock in the warehouses. So he will continue to sell his old stock. And then you will not see the impact of a slowdown in productive activities immediately. It's only when he exhausts those stocks you realize that there's no stock again. And at that point, if he has to borrow and must produce, he has to produce at a higher cost. So those are some of them will have longer lag effects. In terms of inflation, you're going to see a material slowdown in economic activities. And then you have to look at a slowdown in the month of March, which will not have so much happen because people are still selling old stock. Maybe you begin to see a slowdown on import-induced inflation in the month of April by those who are replacing those stocks and importing at a lower exchange rate. So this food impact will take some time to achieve. But like the Monetary Policy Committee said, they want to prioritize management of inflation at the expense of productive activity because they believe that you need a stable level of prices to have productive activities. But they also said something that is very fundamental. They said that the inflationary pressure we're facing today are partly structural in nature. One of which is that food production has actually slowed down in the major food base of the country. And because of insecurity, you need to address that at the core of the inflationary pressure we're facing today. If you don't address that, all these measures we are taking will not see a material improvement in inflation if you don't address food inflation.
But with all of this now, do you see the CBN's targets of about 21% of inflation? Do you see it happening this year?
I think that would be a tough call. Like I said, the major driver of inflation in the country is food inflation. If we continue to drive down economic activities and are able to achieve a lower exchange rate, as we have seen in the past few days, you may see a reduction in fuel costs, which is a major cost component in terms of Nigeria's inflation transmission. But ultimately, more than 60% of Nigeria's basket of consumer price index is driven by food, accounted by food. So you need to address that. If you don't address that, to achieve a 21% inflation rate this year will be a tough call.
All right, thank you so much, Mr. Johnson Chukwu, Chief Executive Officer of Cowrie Asset Management. I guess we'll have to wait till tomorrow and hear the announcement or their decision.
Thank you for having me.